So let's talk about those two key things you point out. It's the price, and then there's the range. What's the
Mhm.
bigger hurdle for those who are considering potentially looking into EVs right now?
So it's always been price. We've been running this survey annually since 2019. We took 2020 off because of the pandemic, but we've always seen the top three concerns, and those are in order: price, concerns about range, and then where people are going to charge them. However, the number of people concerned about price is decreasing. That is becoming less of a concern in the years we've been doing this survey. It dropped from, let's see, it was 42% of respondents this year said that was a concern. Last year was 49%, and that's just in a year. So we are definitely seeing that ease considerably and in a nice timeline.
Earlier this year, ARK Invest CEO Cathie Wood set a new price target for Tesla, saying that if all goes well, Tesla's stock price could reach $2,000 by 2027. But there have been a lot of comments on this, as many do not support Wood's opinion that Tesla's stock price could reach that much in just 3 years. So let's take a critical look at it. Do you think Tesla could go that high by 2027? Well, we're very optimistic that it could happen, especially if Tesla's biggest catalyst happened before that year. You see, Tesla's unique position within the rapidly expanding EV market is one compelling subject for consideration. The company was not only one of the pioneers in this space, but has also consistently demonstrated its ability to stay at the forefront of innovation, leading the pack. So there is a huge possibility for an increase in the price of Tesla stock in the future. Let's see what analysts have to say.
I think he kind of needs to pull a rabbit, and I think if I think there is a rabbit to maybe be seen at this point, is this shift toward this North American standard plug system that Tesla really pioneered. They own. It's in use in their supercharger network, which is now being embraced by other automakers, and they're going to all be switching to his plug standard. If Elon can keep building out that infrastructure, he could be, the one who does the subscription model where he's going to get all this money starting to roll in through people using his network as much or more than any other network to charge their vehicles. So while the product side, I think, doesn't look particularly bright in the near term, I think the longer term infrastructure play could be huge for him. And these moves recently to switch to his system, his plug, his supercharger network from all these other automakers, that could actually be much bigger and a much more important play in long term.
Tesla is considered a good company to invest in for several reasons. First up, leadership and vision, as well as its electric vehicle market. The company is led by Elon Musk, who has a track record of success with other ventures like SpaceX and PayPal. His leadership, as well as his ability to disrupt industries, has garnered significant investor confidence over the years. Tesla is also a pioneer in the EV market, and with the increasing global focus on sustainability and reducing carbon emissions, the demand for EVs is expected to rise significantly in the coming years. This places Tesla in a position to make massive sales and profits in the future. Hey guys, welcome back to Tesla Tomorrow. Tesla is well positioned to benefit from this trend due to its strong brand recognition and leading market share. At $2,000 per share, the automaker would have a market capitalization of $6.3 trillion, roughly the market cap of the world's three most valuable companies, Apple, Microsoft, and Saudi Aramco combined. When Tesla bull Cathie Wood and her firm ARK Invest released their predictions for Tesla's future stock performance, Wood set a $2,000 base case scenario for Tesla's share price in 2027, a bearish forecast at $1,400, and a bullish target at $2,500. While these are very high predictions, Wood gave critical reasons as to why she believes this, and we're going to dive into them in just a moment. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Cathie Wood is a big fan of the stock market, and her flagship ETS has made many investors millions in the past, as she's constantly on the lookout for the next big thing on the board. Before now, Wood had predicted that the stock price could go as high as $4,600 by 2026. This was after she'd predicted a $3,000 stock price by 2025. Wood did not just give these predictions for Tesla's stock without reason. Driving ARK's lofty expectations for Tesla were its forecasts for the company's robotaxi, or driverless ride-hailing, segment, projecting $200 billion in 2027 revenue from the unit in a bearish scenario and $613 billion in a bullish case. ARK estimates that by 2027, Tesla will be generating $1.02 trillion in revenue, and that could be done each year. 25% of that is going to come from its robotaxi segment. And it also predicts that since the robotaxi business could be an incredible source of growth, it's going to make up 58% of Tesla's $6.1 trillion in enterprise value at that time. The firm had recently shared the results of a series of simulations predicting when Tesla's robotaxi might be commercialized, and 2024 appears to be most likely, which is right in line with the company's prior guarantee and guidance. ARK Invest has grown increasingly confident that Tesla will launch the robotaxi service soon. It updated its Monte Carlo model to include a range of launch dates, with late 2024 as the weighted average of all cases. The interesting thing is that ARK is focused on the longer term, which supports the claim of many Tesla bulls that Tesla will be big in the near future. But aside from Cathie Wood's expectation on the robotaxi, Tesla's FSD service could also be a huge catalyst. Tesla's mission has always been to accelerate the advent of sustainable transport. By licensing FSD, the automaker could speed up the acceptance and adoption of autonomous vehicles. And this would not only bring about efficiency in terms of traffic management, but could also significantly reduce traffic accidents caused by human error, leading to safer roads. One other critical aspect to this, especially for Tesla, is data collection. Data is a vital component in improving AI-driven systems like FSD, as algorithms need vast amounts of real-world driving data to learn and improve. With FSD being used in many more vehicles, the diversity and volume of data that Tesla could collect would grow dramatically, and this could lead to faster and more comprehensive improvements in the system, potentially accelerating the advent of truly autonomous vehicles. For this reason, it could drastically increase the reach of Tesla's FSD technology. This move might put Tesla's technology in a vast array of vehicles, encompassing various segments from luxury to economy. And so, Tesla's technology could become even more global, influencing how self-driving cars are perceived and accepted globally. Tesla is more diversified than any other pure-play car maker, and if it unlocks as much value as ARK Invest predicts over the next few years in autonomous vehicles, its stock could soar to the firm's price target of $2,000. Tesla is working on a self-driving robotaxi, which ARK predicts could become the most valuable piece of the entire business. These vehicles would not require any human intervention, and they could be the key in unlocking value from brand new industries like autonomous ride-hailing, which ARK thinks could be a $14 trillion opportunity by 2027. Tesla's prospective robotaxi business line is a key driver, contributing 67% of expected enterprise value and 64% of EBITDA in 2027. According to the investment firm, across the simulation set, EVs will account for 47% of revenues in 2027, at substantially lower margins than robotaxi revenue. Tesla is set for massive gains in a couple of years, and while Tesla stock may still be undervalued, things are going to take a positive pretty soon. But what do you think? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.